What if every stock and bond in the world could travel faster than a text message? And what if grabbing just one tiny percent of that lightning fast flow could catapult a single coin into double-digit territory? Well, I had that exact wait, what if moment last night, staring at the blinking cursor on my laptop at 2 a.m. My coffee was cold, my cat was judging me, and a headline screamed, "The whole world is going tokenized." Now, instantly, my brain kind of went on a scavenger hunt, because if the entire 100 trillion plus global economy gets chopped into digital puzzle pieces, someone has to move those pieces around. Right? Cue XRP, swaggering onto the stage like it owns the joint. Now, I know, price speculation, it can feel like lining up dominoes on a trampoline, right? One wrong hop and, well, the whole pattern kind of face plants, right? But let's humor me here. I fired up ChatGPT, right? Cracked my knuckles and I asked the question. Suppose everything, stocks, bonds, coffee futures, your neighbor's vintage vinyl collection gets tokenized, and XRP funnels just 1% of that value. Where does that leave the price? Now, what came back made my eyebrows launch into orbit. Right, we're talking a potential leap from today's lunch money price to that double-digit club that everyone, of course, keeps whispering about. Now, before we dive, quick reality check here, right? Numbers, they don't care about your feelings, and feelings definitely don't care about numbers. So stick around here, because what I'm about to break down is the math, right? The moving parts and the colossal what ifs, sprinkled with enough anecdotes, caffeine, and dad jokes to keep your attention glued. And if you crave more, or even more, geek outs, then our free educational Discord server is always buzzing. The link is chilling in the description. You can come and say hi and roast my late night caffeine choices. All right. Let's imagine the global economy as the world's biggest airport then, right? Planes equal assets, gates equal investors. So today, boarding passes are clunky paper forms carried by tired ground crew. That's your legacy finance, by the way. Now, tokenization, it swaps those paper passes for scannable QR codes, ZAP. Now, suddenly, every plane, every gate, and luggage tag is searchable, trackable, and tradable 24/7. Right? There's no lost bags. There's no jet-lagged clerks. It's frictionless finance. Now, Larry Fink at BlackRock calls this the future of investing. The translation is that corporate titans, at least that particular corporate titan, I should say, who manages more money than some countries' GDP, thinks that we're ditching the analog runway lights. And, well, he's not alone, right? Goldman, JPMorgan, and BNP, have rolled out pilot programs, and they're no longer kicking the tires, right? They are actually taxiing to the runway. Now, the tokenized real-world asset market ballooned 260% in just the first half of 2025, sprinting from $8.6 billion to over $23 billion. Now, that hockey stick curve makes my morning espresso look flat. But here is the fun part, right? Everyone has to clear all of those token flights for takeoff. Now, settlement layers, the invisible kind of conveyor belts that swap one asset for another, become VIP real estate. Now, XRP's superpower here is speed and cost. Right? We're talking about 3-second clears at a fraction of a penny. That's kind of like ordering a pizza and having it teleport to your table before the waiter's even turned around. So, picture a $100 trillion economy chopped into tokens then. If just 1%, a single dollar out of every 100, zips through XRP daily, well, that's a cool 1 trillion sliding across its ledger every 24 hours. Now, here is where velocity enters the chat. Now, velocity is basically how often a single XRP coin changes hands in a single day. So if each coin completes one lap per day, XRP needs a $1 trillion market cap to keep the wheels greased. Divide that by roughly 55 billion coins and boom, about $18 per XRP. That's not island buying money, but definitely a new car or smell territory. Now, if we kick that velocity down, say coins kind of linger 3 days before passing the baton, and XRP suddenly needs to shoulder a $3 trillion at any given moment. Now that math slings the price up to roughly $54. Half a tank of gas in $2025, right? Maybe not. But compare, to pocket change, it kind of is a glow up. Now, of course, the skeptic in me whispers, yeah, but does money actually move that way? And it's an excellent question in a voice, right? Settlement models are only one lens. Let's flip the script. Treat XRP as digital collateral locked away like gold bars in a vault. Now, if macro players tuck away 1% of global tokenized assets, again, that's about $1 trillion, then XRP's price circles back to that $18 ballpark. But give it a tasty 5% slice, suddenly we're kind of staring down $90 and some change. Now that escalated pretty quickly, right? Now, here is where the story kind of gets real. Tokenization isn't a sci-fi side quest. And by the way, there's going to be a new channel starting soon called SideQuest. You're probably going to want to join the Discord to learn more about that. Now, it's kind of creeping into your brokerage account right now, in fact. BlackRock's BUIDL fund launched in March of 2024. By August, Cantor, was quoting tokenized treasuries like ordering tacos. Quote unquote, I'll take a $1 million slice, thanks. Now, on the kind of DeFi side, protocols like Athena and Maple are quietly kind of renting out real-world treasury tokens to yield farmers hunting for that extra APY gravy. Now, I remember my first brush with tokenized bonds. A buddy shot me a link shouting, "Dude, this is wild, click it." Now, I half expected a kind of rickroll, but instead I landed on an interface where I could buy a $50 chunk of a short-term treasury, tokenized on chains, right? And there's no broker fees and there's no minimum buy-ins that lock out ordinary mortals. It kind of just felt like sneaking into a VIP lounge wearing my flip-flops. But hold up, because every rose has its thorn, and this thorn's name is regulatory clarity. So imagine you're driving a Ferrari blindfolded. Mental, right? Now that's how institutions feel about driving headfirst into crypto rails without clear guidance. Now Larry Fink straight up kind of begged regulators at Davos for a rulebook. Why? Because big money hates uncertainty more than toddlers hate nap time. Without clear rules, capital tiptoes instead of sprints. And that's where Ripple's ongoing dance with the SEC rubs against our utopian scenario here. Right? A bank charter, a fully greenlit ODL corridor network, or a robust global framework could flip the lights to green. Conversely, a kind of derailment could slam the brakes on. So, while the math kind of paints a pretty sparkly picture, the road is littered with red tape confetti. Now, by the way, if you're mapping out your own crypto journey, and I park most of our kind of active trades on Kraken Pro. It's kind of built like a tank and the UI doesn't fight me. And yes, the link in the description is an affiliate link that directly supports the channel's Caffeine Fund. So hit it if you're kind of feeling generous, or just grab the info and dive on. Right? And I should say drive on. There's zero pressure to sign up here. It's just total transparency. I like Kraken Pro. It's well worth exploring. Use it, don't use it, I don't mind. But I think it's worth having access and checking it out regardless. So give the link a click down below. And of course, all of this brings me to the capital pit stop then. So listen closely, right? And this might just shock you, but I am not a financial advisor and nothing in this video is financial advice. Cryptocurrencies are highly volatile and you could lose all of the money that you invest. You should always do your own research and consult a qualified professional. Your investments are entirely your responsibility and you should know that nothing is ever guaranteed when it comes to investing. Neither I, this channel, nor YouTube are liable for any losses. And today's video is for entertainment and educational purposes only. Alright, that's the disclaimer, hats off. Let's kind of keep rolling here. Let's think back to 1993, right? The internet was a funky hobby for academics and basement tinkerers. Now, a decade later, Amazon was delivering books to your doorstep and Google was a verb. Now, tokenization could follow that kind of S-curve, but faster, because the digital rails are already laid. BlackRock and Goldman, they are not messing around just for fun, right? They're sniffing profit, and institutions chasing profit tend to bulldoze obstacles like hungry goats chewing through cardboard. Still, technological promise doesn't equal guaranteed returns, right? Nothing is guaranteed. Case in point, you had Betamax, HD, DVD, Google Glass, great ideas that, well, fizzled. XRP's edge is its focused use case, cross-border settlement, liquidity bridging, speed. Now, it's not trying to kind of be everything to everyone. But that specialization is a double-edged sword. Dominate that niche and you're kind of golden. Get displaced and you're, well, MySpace at a TikTok convention. And here is a mind twister. Velocity isn't just a spreadsheet metric. It's actually human behavior, right? Traders, they chase gains and yield, right? Treasurers, they hunt for liquidity. CFOs fear slippage. If XRP's bridges, are the kind of cheapest toll roads, well, traffic could indeed spike. But if a rival chain offers smoother asphalt tomorrow, cars might U-turn. Now in tech, yesterday's moat becomes today's meme. Okay, let me kind of take you on a personal anecdote then. Last month, I wired a 4-figure sum overseas to pay a freelance designer. Now my bank kind of slapped me on a kind of 3-day hold, a mysterious fee, and used an exchange rate that looked like it fell off of a ladder. Meanwhile, of course, stablecoins could have zipped the same payment in under 5 minutes. Multiply that annoyance by corporate billions or corporates kind of moving billions of dollars daily, and suddenly settling on public ledgers makes CFOs drool. Now, tokenization dials that one more notch further. So imagine your payroll isn't dollars in a checking account, but tokenized treasuries earning yield until the second that they hit employees' wallets. Idle cash becomes productive until the 11th hour. Love it or hate it, interest rates are gravity, and tokenized yields could rewrite corporate treasury playbooks. So, where does that leave our hypothetical $18 to $90 XRP range then? Well, let's go ahead and stress test it. Scenario A, everything goes right. Regulators craft, harmonious kind of rules, and institutions, they cozy on up, and XRP grabs that magic 1% share and slice as a kind of lightning fast settlement layer. The market cap, of course, balloons because it only represents the price, and the price tag struts into the double-digit levels. Champagne pops on crypto Twitter. Scenario B. Adoption is slower. Velocity is higher. Coins whirl like kind of carousel horses at a toddler's birthday. Lower collateral requirement equals a kind of dampened price. Still up from today, but nowhere near Lamborghini land. So what about scenario C then? Regulatory statement, or stalemate, I should say, or tech leapfrog by competitors. XRP remains a respectable cog, but not the global standard. Price stays grounded. Twitter goes back to dog memes. So the point is that tokenization flips the board, not dice rolls, and are still just simply dice rolls, in fact, right? And the $100 trillion figure itself might prove conservative, right? Citigroup pegs potential tokenization of assets at $68 trillion by 2030, while others think tanks, they kind of throw out $130 trillion by 2040. Even if a fraction routes through XRP, the multiple scenarios create a kind of wide funnel of possibilities. I also see a world where we see quadrillions through tokenization, not just trillions. So to keep my own bets sane, I'd kind of treat these kind of moon math projections like out-of-town guests, entertaining them for the weekend, but I wouldn't let them move into the spare room. Right? Strategy means kind of balancing the hype with sober risk management, right? And that's why our Discord community is absolutely priceless, right? We crowdsource sanity checks, we share sources, and yes, we poke fun at each other's wild predictions. The link's waiting for you in the description. You can bring your 2 cents and your best gift game. One more sprinkle of data. Tokenized asset total value locked shot past $7 billion in late 2024, then $23 billion in mid-2025. Now, if that pace holds, $50 billion by New Year's Eve doesn't feel like a moonshot. It just feels like Tuesday. And DeFi protocols integrate RWAs means yield hunters will keep pouring, kerosene, on the fire. Right? This basically means more utility, it means more liquidity, and it means more eyeballs. But liquidity begets volatility, right? Remember March 2020? When crude oil futures went negative? Well, a robust settlement layer needs to survive black swan chaos, not just sunny day volume, right? So XRP's on-ledger design plus escrowed supply can ease the shock, yet systemic kind of cascades can still whiplash prices. So the grown-ups in the room, hedge funds, pension managers, will demand battle-tested risk frameworks before shoveling serious capital. Which of course circles back to you and me. The biggest edge that retail investors hold is agility. Right? We're speedboats next to those super tankers. Right? If tokenization cracks open new rails, we can pivot faster than Berkshire Hathaway at a kind of skateboard park. But that edge is useless unless, you're educated. So education is priceless. So keep stacking knowledge, ask uncomfortable questions, and chase, primary sources. And yes, double check the credentials of every talking head, including myself. Let's zoom out one last time. A tokenized world could unlock fractional ownership of everything. Real estate slices are obviously traded like songs on Spotify. And art masterpieces, right? Broken into millionth share tokens. Carbon credits swapped seamlessly as emojis. Someone needs to settle, secure, and collateralize all those tokens. Will XRP wear that crown? Possibly. Is the math tantalizing? Absolutely. Is it guaranteed lottery ticket? You already heard the disclaimer. Nothing is guaranteed except my need for more coffee. And speaking of coffee, I'm cutting myself off here. Now, here's a quick recap. Global tokenization is barreling forwards, right? And institutional giants are stacking claims. And XRP sits at an intriguing crossroads then. If it nabs even a slither of that 1%, modeling kind of paints to $18 plus price tag, potentially stretching into the 90s under slower velocity and higher collateral ratios. But leaping from spreadsheet fantasy to market reality demands regulatory green lights, continued tech excellence, and a bit of old-fashioned luck. So, where do you see XRP landing on the runway? You can drop your spiciest predictions in the comments below, grab a seat in the free Discord classroom, and if you're hunting a sturdy trading platform, check out Kraken Pro with the affiliate link down below. It kind of funds my caffeine and probably my cat's treat addiction. While you're here, why don't you smash that subscribe so if you're hungry for more kind of brain-bending crypto adventures, and of course, I'll catch you in the next rabbit hole.